This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on July the 6th, 2017. Our time is 8:39 Mountain. Hope everyone had a great Canada Day long weekend, 4th of July in the United States. We're back to work, and it seems like a scorcher all across the western provinces of Canada and down into the United States as well. Hopefully everyone can survive the heat. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. If you ever miss a radio show, they're archived on Harold's website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. And we have a podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. As we tape today's program, the implied probability of the Bank of Canada raising rates next week by a quarter percentage point remains close to 90%. Canadian dollar reached a high of 77.44, and that was on Tuesday. It hasn't hit 78 cents since August 19. And one of the stories that we're following, Toronto City Council during the week looked to put the ball in motion for possible taxes on vacant homes in Toronto. They're trying to slow down what is obviously a market that was completely out of control. And as we tape today's program, we have information for you from Bloomberg. And Bloomberg came out and said that Toronto home sales were down 37%. They are having an impact on slowing the housing market down in Toronto.
Yeah, but I got to tell you, that's foolishness. Again, to see rises and decreases in real estate prices of over 30% in a month is unheard of. It just means it was a bubble that was waiting to explode, and a lot of people are going to get hurt. You know, the thing that also surprises me is why the Bank of Canada would raise interest rates. I mean, it's only going to destroy the real estate market even more. So that's a situation that totally got out of hand between Vancouver and between Toronto. The prices just absolutely skyrocketed. And unfortunately, what's happening now, people are really going to pay the price for it because, you know, you think that you know real estate, but most people don't. What they see happening was a phenomenon. The price of real estate in Toronto, for example, was just skyrocketing. Again, to go up 30% in 1 month is unheard of in the real estate market, so you know that that market had to crash. So, again, at this point here, I just hope that nobody gets too hurt in that market, but I know it's always the small guy, the small investor that sees a market running, wants to make some easy money, jumps in at the tail end of it, and is the one that ends up getting hurt the most. So I hope that isn't the case for all of our Canadian listeners type of thing. But again, for real estate to be trading like that, 30% up in a month and 30% down in a month is absolutely ludicrous. Then to add on top of it, the fact that if they do raise interest rates in Canada, which I see no reason for them doing, but if they do, it's only going to raise mortgage rates. And that's going to hurt the real estate market even more. So I wonder how well thought out this plan was. But at this particular point, the last thing I would want to be doing is trading in the real estate market in Toronto and in Vancouver. Now, after the long weekend, the markets are a little bit quiet. As we're taping the show today, gold's down $3.60 trading right now at $12.24. So gold's basically trading in a range. The fact is that gold tends to go with the U.S. dollar. When the U.S. dollar is strong, gold goes down. The currency markets have been all over the place, extremely volatile the last couple months. A lot of it to do with President Trump. Again, we're not getting any direction as to which way this presidency is going to go. And I know, you know, being a Canadian living in the States, it's going to be a very, very difficult time. Obviously, the transition from businessman like Donald Trump to president, you know, with the political situations and all that, he's just not getting the job done. His popularity's dropped to 30%, and again, where I was excited at the potential of him becoming the president, we're now starting to see that things aren't going the way that we anticipated. So I'm hoping he gets his act together. most of the countries right now are not doing well financially, so you've got markets that are basically trading in a range. However, one market that we do really need to watch at this point is the gold market. It's not that gold is in a bullish stance right now. It's trading in a range, but the fact is that there are rumblings that there are going to be a potential war or situations with North Korea. We saw uprisings of that this week when North Korea was firing missiles just over Japan type of thing. So they said they have a missile that can reach the mainland of the United States. Things could get a little bit heated. That's why I figure there's about a $200 premium in the gold market at this point. So you've got about a $200 premium in gold that wouldn't be there right now if there wasn't the potential of a problem with Trump and other countries like North Korea, Afghanistan, Syria, that type of thing. So I think at this particular point, we really need to look at the markets that have been stagnant and trading in a range that they could break out. The most important thing is to pick a trend in the market. And again, we're getting closer to a trend in gold if we find that geopolitical situations are going to get out of hand. So again, right now the gold market's trading at 1224. There's very heavy support in gold at 1180 and also at 1050, but I doubt that we're going to hit those numbers with the type of situations that are in the market right now. On top of that, you've got the oil market that is up today but is down substantially from where it was a couple months ago. We're trading right now at about $46 in crude, trading up about 84 cents. We're still extremely bullish on the U.S. dollar. No matter what's happening with Trump at this particular point, I do believe he is going to get his act together. And I do believe that with Europe in such bad shape and the economy around the world in bad shape, still most of the money that is coming into the United States to go into the stock market. Now, that's the crazy thing. The stock market, even though it's hitting record highs, is not the place to put your money, because 90% of the people that trade stocks lose their money. So how is it possible that the Dow could be sitting right now at record highs and people are still losing money in the market? It's very simple. It's only a few stocks that in actual fact make up the Dow and are making up the moves in this Dow. Over the last 90 years, and this is in the newsletter, this is very interesting, Randy. I found this fascinating. So with the Dow Jones and the S&P creating $32 trillion in lifetime wealth of this approximately 90-year market, more than half of that came from only 86 top-performing stocks out of 26,000. So how in the world do you pick a winning stock when out of 26,000 stocks, only 86 of them performed in a major way? So that's why we're saying no matter what the stock market's doing, if you're picking individual stocks, the chances are is that you're going to lose your money. Statistics say that 90% of people that trade stocks and commodities on their own lose their money. So obviously the odds are not that good. What this show is alternative assets, assets outside of the paper asset market. We've seen what's happened in stocks before. We saw in 2008 when the Dow dropped from 14,000 down to 6,500 and people got wiped out. We saw what happened in 2000 and 1999 when the NASDAQ went from 5,000 down to 1,000 and everybody got wiped out. So the fact is that right now, it's not that money is pouring into the United States because things are so great in the States. It's pouring into the U.S. stock market because there's really no other place to put the money, and people are comfortable trading stocks. Again, if you look at what the statistics are, and as Canadians, if we look at what has been done in the Canadian stock market, mostly in retirement savings plans, you're going to realize that over the last decade, nobody's made money in retirement savings plans of any consequence. So even with a raging stock market in the United States, nobody's making big money. Our show is about alternative assets, assets that hold their value, assets that you hold in your hand and you own outright, not paper that could be taken away from you and manipulated and destroyed. Again, we saw back in 2008, because of the derivatives market and a mortgage crisis, we saw major corporations on the verge of bankruptcy. If the U.S. government didn't step in and print trillions of dollars, the U.S. would have gone down at that point. So the fact is that if it happened then, it could happen again now, because nothing has really improved. Nothing has changed. There's still the huge debt. There's still derivatives in the market, which is a quadrillion-dollar market that is unregulated. So again, there's certainly landmines out there that could explode at any time. And the sentiment in the market at this point is that the feeling is that the Dow is getting ready to take a gigantic drop. Again, it's not hitting record prices because of bullishness. It's record prices because money is coming in from other parts of the world, because there's no other place to put your money that they're comfortable with at this point. We're comfortable with physical gold. We're comfortable with physical diamonds. We have private investment programs that our clients invest in with us that make over 25% a year in U.S. dollars. And these are available to all of the listeners to our radio show. All of our Canadian clients that are invested with us are invested in these type of investments. The other thing is that we have an auction coming up starting at the end of this week. It's a new concept for us. Most people know that our auctions have always been live for diamonds and coins and things like that. We're going into a new format, so we're going to tread lightly into it the first couple weeks and then go heavier into it during the summer. So be aware that we are having an auction starting this week. Some beautiful diamonds. We have Elizabeth Taylor's piece, one of her amazing brooches up there. We've got one of the most beautiful diamonds that I've ever seen. It's a 209 Asher cut, fancy, vivid yellow, internally flawless diamond worth upwards of $400,000. So we've got some outrageous pieces, and we'll keep on adding to that as we go through the summertime. But a lot of exciting things happening with our firm, even though at this point here, most paper asset investments out there are extremely dangerous. I would never be buying stocks right now. Never. I would not be buying real estate right now, especially since real estate in Canada went up so much and is now starting to free fall. So be very careful with your investments at this point. These are not normal times. Back when our parents and grandparents were trading in the markets, things were a lot different. It's a totally different world now, and people have a totally different outlook to investing. I'd say at this point here, look to get out of stocks and look to alternative assets as the way that you're going to get through these extremely turbulent times.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. Maybe you've been listening to the radio program for a long period of time, or just started listening to us recently. Now's the time to pick up the phone and start making some money with the different programs that Harold Siegel has in place. rarecoloreddiamonds.com is his website. The telephone number, 1-800-432-1022. In the second half of the show, we will talk about diamonds. Our featured diamond of the week is a point, and this is a beauty, 0.91 carat radiant cut, fancy intense yellowish green. Go and take a look at a video of this diamond. Featured diamond of the week, rarecoloreddiamonds.com is the website. Remember, when you speak with Harold, the call is free. Anything discussed is 100% confidential. We'll talk about diamonds a little later in the show. And the big question here in Canada, will they raise rates? Ease up on the accelerator before the stoplight. That according to Pelose, the head of the Bank of Canada, comments on interest rates ahead of the decision date. Bank of Canada to make interest rate decision on July the 12th, just over a week ahead of the Bank of Canada's next decision on interest rates. Governor Stephen Pelose says the bank must look ahead to where the economy is expected to be in 18 to 24 months when it comes to setting monetary policy. As our senior deputy governor said a week ago, when you're driving towards a red stoplight, you ease up on the accelerator well before you get there instead of waiting for the last second to stop. He said that in an interview in Germany. If we only watched inflation and reacted to inflation, we would never reach our inflation target. We'd always be 2 years behind in the reaction. Adding, the bank must look to other inflation predicting indicators. The Canadian Central Bank is releasing that info, as I said, July the 12th. Some economists now expect the bank to raise rates for the first time in 7 years. The bank's target for the overnight rate currently sits at 0.5%, with markets putting about a 90% chance of a bump up to quarter point, about a quarter point raise in rates next week. And that was an interview that Pelosi did out of Germany. Also, David Rosenberg from Gluskin Chef coming out saying he'd turn bearish if the loonie goes above 80 cents. The loonie rally is closer to its end than its start, according to David Rosenberg. Also, the Bank of Canada, and this is a story that we can send you out, and you can take a look at it in our free weekly newsletter. Bank of Canada interest rate decision, 3 reasons to hike, 3 reasons to hold. If you do not receive our free weekly newsletter, get it from Harold. Call him, 1-800-432-1022. The website, rarecoloreddiamonds.com. We'll send it out via email. You can go through it in 5 to 10 minutes, or you can spend hours if you want. One of the concerns, obviously, with raised interest rates is the debt that Canadians are holding. Canadians' love for debt is taking us into uncharted territory, according to the PBO. Households owed $174 for every $100 in disposable income in the first quarter, according to the Parliamentary Budget Office. Canadians are expected to keep piling on more debt, even in the face of a long-anticipated increase in interest rates, taking household financial vulnerability to levels never seen before. A new report from the PBO said household indebtedness hit 174% in the first quarter of 2017. That means households owed $174 for every 100 in disposable income. As well, Canadians owe more than up to, it's hard to believe, a big number, $1.7 trillion, up 7% in the past year, according to Equifax. The average Canadian now owes more than $22,000 on top of their mortgage, and the amount is rising fast. Canada's appetite for debt is at an insatiable rate as ever. A new report from the credit monitoring firm Equifax said Equifax calculates that Canadian consumers now owe about $1.729 trillion at the end of the first quarter, an increase of roughly 7%. And that's something that obviously, if they're going to be raising interest rates, that is going to be a concern, because Canadians will have to take that into account with their budgeting. Their debt level will be affected by interest rates. They'll be paying more interest on the debt. Now, Pelosi has come out and said that he does not believe that should be a concern. He feels Canadians will be able to withstand what's happening with a rate rise if it does happen July the 12th. The United States, they have their own issues. The U.S. government is bringing in a lot of money. In fact, the most tax money they have ever brought in. But strangely enough, in fact, income tax is up 9.5% next year, but debt climbs to more than $1 trillion. So they're bringing in more money than they've ever brought in before, but the debt will climb to $1 trillion. The world now is in debt $217 trillion. The borrower is the servant of the lender, and through the mechanism of government debt, virtually the entire planet has become the servants of global money managers, money changers. Politicians love to borrow money, but over time, government debt slowly but surely impoverishes a nation. As the elite get governments around the globe in increasing amounts of debt, these governments must raise taxes in order to keep services and obviously keep servicing the debt. In the end, it's all about taking money from us and transferring it into government pockets, and then taking money from government pockets and transferring it to the elites. It is a game that has been going on for generations, and it's time for humanity to say that enough is enough. According to the Institute of International Finance, global debt has now reached a new all-time record high of $217 trillion. Harold, 3 minutes left in our segment. You can see the world is awash in debt, and at some point, it will have to be dealt with. There's just no getting around it.
You better believe it, Randy. And the surprising thing is that with all the debt, and as much as Canadians love debt, which I'm shocked at, to be honest, because most Canadians are very frugal and live within what they earn type of thing. But by raising interest rates, that's the last thing you want to do when people are in debt, because it only increases the debt that they have because they have to pay more interest. Just like raising interest rates in a really bad and susceptible real estate market could turn out to be disaster. So again, I don't know how well thought out these decisions are at this point here, but both of those situations seem disastrous to me, and I don't see why in the world, what the benefit is of Canada raising interest rates at this point. No other country in the world is raising interest rates except the United States, but the U.S. is a reserve currency. They've got to do something like that. They've got to support that currency. But I don't see the point of Canada raising interest rates at this time. I just think it's going to hurt an already hurt economy. So I hope that decision works out, but it doesn't look like the right decision to me.
Well, the housing market, obviously growth is dependent in Toronto on the housing market. If that starts to deteriorate, and then on top of it you have the oil market dependent a lot for help here in Western Canada and really throughout Canada. If oil market and the housing market starts to go, I don't quite understand why they would be trying to raise interest rates at this point. Connect with Harold. He has programs in place where you can start making money today. If you're sitting in a GIC or just a savings account earning 1%, you're never going to be able to retire. How do you invest today so you can retire tomorrow? Harold Siegel has programs in place. Give him a call, 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. Our featured diamond of the week is a .91 carat radiant cut, fancy, intense yellowish green. You can see it online, rarecoloreddiamonds.com, featured diamond of the week. And we'll talk about diamonds here coming up in the second half of the show. Now, Harold touched on it off the top of the show. There's an article by Paul A. Merriman, Why Picking Stocks is Only Slightly Better Than Playing the Lottery. And it is an eye-opening article. As Harold was saying, the Dow Jones and S&P have created about $32 trillion in lifetime wealth over approximately 90 years. More than half of it came from only 86 stocks out of nearly 26,000. This is a really fascinating article. Get our free weekly newsletter, Why Picking Stocks is Only Slightly Better Than Playing the Lottery. We'll be happy to send it out to you. rarecoloreddiamonds.com or call 1-800-432-1022 to connect with Harold. We'll come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on July the 6th, 2017. Hope you had a great Canada Day long weekend, or 4th of July for those that listen to our radio program in the United States. Connect with Harold Siegel via rarecoloreddiamonds.com. You can speak with him personally and privately. Anything discussed, 100% confidential. 1-800-432-1022 is Harold's number, 1-800-432-1022. It's very hard to retire in the financial world we find ourselves in today. There are so many questions, so many landmines, and Harold Siegel is the one there to help guide you through those landmines and make sure that you are in a position where you can retire someday. He has different programs in place. You can speak with him personally, privately, 1-800-432-1022, the website rarecoloreddiamonds.com. Our featured diamond of the week is a .91 carat radiant cut, fancy, intense yellowish green. I love green diamonds, and this one has a perfect greenish yellow hue. It is absolutely gorgeous. You can see video of the diamond, rarecoloreddiamonds.com, featured diamond of the week. And Harold will go through some auction results here in a moment, but this diamond is just so beautiful. The color of it is just outstanding.
One of my favorites of all time. It is absolutely stunning. The color of it is gorgeous. And the fact is that the combination of colors of that particular diamond is extremely rare. So it's a beautiful sized diamond. It's the color of it is absolutely sensational, and green diamonds are the rage. Again, we've seen a huge move come in blue diamonds over the last 5 to 10 years, but now greens are starting to show the same type of light that blue diamonds have. Blue diamonds have basically gone, vivid blue diamonds have literally gone from about 200,000 a carat in 2005 to over 5 million a carat last year. So that's basically what is happening in the blue diamond market, and we feel the same situation is now going to happen in the green market. Now, this particular diamond, it's really spectacular. It's almost a carat. It's a .91, and it's a fancy, intense yellowish green. So green is the primary color. There is a hint of yellow in it, but it really changes the color and makes the color of that diamond just absolutely breathtaking. To see it in person is magnificent, but just to look at it on the video, it's a very, very special diamond. You know, the thing about diamonds is it's a hard asset, it's a long-term investment, but they never decline in value. And with the way that the investment world is today, to find an asset that will maintain its value and go up over time, which is, for example, what a retirement savings plan is supposed to do. You know, as young workers, when we start into the workforce, you know, in our 20s or 30s, and we go to work and we start putting money away for retirement in the form of a retirement savings plan, well, those have not performed. In the last decade, most people that have RRSPs have not made a dime. So the fact is that if you put that money into a rare colored diamond, for example, and held on to that diamond for the same length of time, 25, 30 years, the returns on that diamond will be far substantial to anything that you would have seen in your retirement savings plan. And the fact is that, you know, the stock market will go through ebbs and flows. We've seen situations where the market has made a gigantic rally, but then it's gone ahead after, 4 or 5 years and absolutely plummeted and taken away all those profits. That doesn't happen in the diamond market. Every diamond is individual. It's not something that could be mass marketed. Somebody's not all of a sudden one day going to walk onto the market and dump, thousands and thousands of carats worth of diamonds. That never ever happens. But it will happen that they'll dump thousands of shares of stocks or of a commodity or anything because they're paper. There's a big difference between investing in paper and in hard assets, and that's what our business is, hard assets. So 2 things when you look to invest. One is capital preservation, making an investment where you're not going to lose your money, and the next is capital appreciation, where you hope that your investment goes up over time. And I think that rare colored diamonds epitomizes that type of investment. And this particular diamond, again, it's a .91, almost a carat, but the true value of this is in its color. It's got intensity. It's a fancy, intense yellowish green, and again, the color of it is magnificent. Now, a diamond like that could be put away in a safety deposit box, or a diamond like that could be, put into a beautiful ring or a necklace or a piece of jewelry that will only enhance its value and give the owner of it, tremendous pleasure and pride of ownership in wearing something like that. The fact is that the longer you hold on to diamonds like this, the higher and higher they go in value. And there's countless examples. We've said on the show many times, for example, my wife's girlfriend inherited a 5-carat pink diamond from her grandmother. The story on the diamond is that 50 years ago, the grandmother bought that diamond for about $50,000 when most people didn't know that much about pink diamonds. Well, now the diamond's worth $5 million. So from $50,000 to $5 million in a 50-year period. That's a substantial return that you don't see on hardly any investments. That's why most people that purchase diamonds as investments keep it in a family trust or keep it in the family to pass down from generation to generation, because that's when these diamonds really take on a life of their own. That's when the biggest returns come. We've talked about it on several shows in the past of Shirley Temple's diamond, that her father bought the diamond in 1940 for $7,100, and in 2016 it sold for $25 million. Now, you may say to yourself that that's 1940 till now, is 76 years. But the fact is that it's still an investment that stays within your family. You know, you buy a home for a long period of time, or investment property possibly for a long period of time. That's what we do with diamonds. The longer you hold them, the more they go up in value. A diamond like a yellow flawless diamond will increase by about 15% a year. Now, the fact is that you want to hold on to that diamond for 20, 25 years. Those are the type of diamonds I bought for my young grandchildren to hold on to, and I wouldn't buy them stocks or bonds or those type of investments because, in my opinion, you know, they could be worthless. But that will never, ever happen with a rare color diamond. So, again, at this particular time, the diamond market is one of the strongest areas to put your money. We have our auction starting this week. We're easing into it. It's going to be a phenomenal auction. It's going to last for many months. It's not like our prior auctions to where we did them over an hour period and it was a live auction. We will continue with doing those, but what we want to do is build up a new clientele. We want our auctions to be viewed worldwide, and that's exactly what we're doing at this point, spending an awful lot of money on advertising through social medias of people that earn over $250,000 a year. So we put a tremendous amount of time and money. It took over a year to build this auction site. It's good. We're going to ease into it this weekend, advertise it very heavily as soon as we know that, you know, we've covered all of our bases and, you know, tested it and made sure that it's running smoothly. But we're very confident in it. It was built by our friends in Vancouver, Relentless Technologies. They built all of our websites for us. And we're starting off with 10 items. One of them, the major item, is Elizabeth Taylor's brooch. The important thing about this is that this is a brooch that was designed and worn by Dame Elizabeth Taylor. In actual fact, included with the purchase of the actual brooch is a picture of Elizabeth Taylor wearing the brooch, and that is extremely valuable. We have found that some of the Elizabeth Taylor pieces, most of the Elizabeth Taylor pieces, have sold for way more than what they were estimated to sell for. We're estimating the sale of this particular brooch in and around the 80 to 100,000 range. However, in 2011, some of Elizabeth Taylor's lesser expensive pieces went up for auction, and for example, one of her earrings went up, and they estimated it would sell for 80,000. It sold for 800,000. Then they had another one of her pieces that was supposed to sell for just slightly under 100, and it sold for 900,000. So anything owned by Elizabeth Taylor, worn by Elizabeth Taylor, anything to do with Elizabeth Taylor is worth an absolute fortune. So we've got that piece. I mentioned earlier in the show, one of our clients is putting up a 209 Asher cut, fancy, vivid yellow, internally flawless diamond, one of the rarest yellow diamonds in the world. We also have two coins going up, a Libertad, which I know is Randy's favorite coin. It's a kilo, which is 2.2 pounds of solid silver, 0.999. It's a 2011. It's one of the most beautiful coin sets you'll ever see. On top of that, we put up a kilo Aztec calendar. Again, these are both extremely rare, extremely valuable, and collector's pieces that will continuously go up in value. In fact, both of those silver pieces, you know, are worth so much more intrinsically because of their investment value than the silver value. So when you see these pieces, you're just going to freak. They are absolutely gorgeous. On top of that, we have some Argyle pink diamonds. We have a fancy, vivid pink Argyle. We all know that the Argyle mine is going to close within 3 years, and these diamonds are extremely valuable and should increase in price substantially. And as we go along and sell pieces from the site, what we'll be doing is taking those pieces down, obviously, and adding others. And we anticipate having our auction running throughout the entire summer and possibly running till the end of the year. So we're going to be able to accommodate clients that have been waiting a while to sell their diamonds. But again, this was worth it. We've been spent a ton of money and worked feverishly to build this, and we're very confident that not only is it going to be successful, but we are going to attract investors worldwide with our advertising campaign that we're just starting. So all in all, Randy, a lot of exciting things happening. The diamond market is on fire. I know that you have some auction results to relate to us, but these auctions over the last few years have just set records every time we've seen these amazing diamonds go up for sale. So why don't you enlighten us and let us know what's happening in the diamond auction market?
I will. And I should mention, the website is at hsfineauctions.com? Is that how
Yes,
we're
it is.
doing it? Okay,
Yep, and
so
you can sign up for it over the weekend or at any time and view the auction. But again, we have two types of auction. One is our very famous live auction site, but now we're testing another type of auction that will last much longer, and we think it's going to be substantial, especially in combination with H. Siegel Fine Auctions live auctions.
all right, and this is something that I promised we would do. Go back over the first 6 months of 2017 and take a look at all the major auctions for Sotheby's and Christie's. And we had results the past couple of weeks. This is from Sotheby's magnificent jewel sale, including the legendary Stotesbury Emerald from April 25, 2017, 10 a.m., New York City. Lot 87. An important rose gold and pink, and this is a fancy pink diamond pendant set with a pear-shaped fancy pink diamond weighing 11.19 carats. It is absolutely gorgeous. The estimate on it was $1 million. It went for $2.4 million. If you would like to receive these auction results, we'll be happy to send them out to you. Speak with Harold, 1-800-432-1022. RareColoredDiamonds.com is our website. If you'd like to see our featured diamond of the week, go to Rare Colored Diamonds Featured Diamond of the Week. It's a .91 carat radiant cut, fancy intense yellowish green. Lot 88, an important platinum fancy gray-blue diamond and diamond ring, set with an emerald cut fancy gray-blue diamond weighing 5.07 carats. The mounting accentuated by baguette, triangle, and shaped cut diamonds weighing approximately .30 carats and circa 1930. The estimate on it, and here's I hope you're sitting down, Harold. The estimate on it, $750, $1.5 million. There's a double. Lot 101, a rare platinum, fancy, vivid green diamond and diamond ring, centered on a cut-cornered square mixed-cut fancy vivid diamond weighing approximately 1.64 carats, and it was flanked by two cut-cornered triangle-shaped diamonds weighing approximately .65 carats, and the estimate on it, $1 million. It went for $1.2 million. Lot 106, an exquisite platinum fancy vivid blue diamond and diamond ring of crossover design set with two pear-shaped fancy vivid blue diamonds weighing .96 and 0.64 carats, accented by round diamonds, and the estimate on it, $700,000. It went for $876,500. Lot 230, and this is another one of the, I hope you're sitting down, a platinum, gold, fancy, deep yellow diamond and diamond ring, centering in an emerald-cut fancy deep diamond weighing 6.17 carats. The mounting set with small round diamonds weighing approximately .25 carats. The estimate on this was $150,000. It went for $750,500. That's a huge winner. $150 to $755. Also, Lot 83, a platinum fancy intense blue diamond and diamond ring, centering a marquee-shaped fancy intense blue diamond weighing 1.14 carats, accented by baguette and single-cut diamonds. The estimate on it, $200. It went for $492,500. Lot 97, and we're down to the final two. Gold, fancy light, yellow diamond and colored diamond ring, centering a cut-cornered rectangular modified brilliant cut fancy light diamond yellow and weighing 15.34 carats, flanked by two heart-shaped diamonds of yellow hue weighing approximately 3.40 carats. The estimate on it, $100,000. It went for $162,500. And then finally, this diamond actually did quite well too. Lot 35, a platinum, gold, fancy, intense yellow and diamond ring. The estimate on it and the weight of the yellow diamond was 7.22 carats. The estimate 80. It went for $112,500. But Harold, you can see that there were some really big winners there. Lot 82, The Fancy Intense Blue Diamond and Diamond Ring, 200 to almost a half a million. Then you had as well lot 230, Fancy Deep Yellow Diamond and Diamond Ring, 150 to 750,000. You had the other diamond that sold for 700, going for 876. It was a very, very good sale back in April at New York City, Sotheby's Magnificent Jewel Sale. And we will continue on a weekly basis to go back and mine the data of the sales that have taken place over the first 6 months of the year. But, Harold, a very positive sale for those that are invested in rare-colored diamonds.
You better believe it. Those returns were phenomenal, Randy. And again, it isn't that the people at the auction houses don't know their business. They do. You know, if they estimated that a diamond was going to sell for $750,000 and it sells for $1.5 million, it's not that they don't know their business. It's just the times. The fact is that most people are very worried about keeping their money in the stock market. Everybody knows that this stock market is top-heavy and could fall at any time, and there goes all of your profits. On top of that, all the paper markets are suspect. So the fact is that when you have a track record like there is in certain colored diamonds, it's an attractive investment. Now, we hear a lot about the major diamonds that are sold, the big diamonds that sell for $20, $50, $70 million, and there's been many of those. But what Randy's trying to show is not all diamonds that make tremendous returns are $20 and $30 and $50 million diamonds. In actual fact, percentage-wise, the biggest returns are for the lower-priced diamonds because, let's face it, how many people can afford a $70 million diamond? By the way, 2 of those sold already this year. So the fact is that if the billionaires and the multi-millionaires are buying these diamonds, it makes sense for us to do so too. The fact is that they're longer-term investments. You don't buy diamonds and hold on to them for 5 years. You're not going to make any money with that. You need to put them away for the longer term, give them the chance to go up and become more rare. The fact is that pink diamonds from the Argyle mine will become extinct soon because the fact is that the Argyle mine produces 95% of the pink diamonds that are mined in the world. Once that mine closes, it leaves a small handful of diamonds that may be found every 4 or 5 years. So the fact is that these diamonds, like Argyle pinks, like blues, like greens, like these amazing yellows, they come around once in a lifetime. You put them away for the long term and forget about them. Either put them in your safety deposit box or put it into a beautiful piece of jewelry and wear it and enjoy it, and then put it up for auction. We have our own auction business. Please sign up for the auction this weekend and the ongoing auction that should last the entire summer. I think you're going to find it extremely exciting. We've got some beautiful pieces coming up. I know there's some clients out there that need and want to sell their diamonds. Please get in touch with us and we'll accommodate you as much as we can, as quickly as we can. But we're very optimistic about the hard asset market. Another example of how well collectibles, hard assets, do. Back in 2004, through my marketing company, HES Marketing, we were offering extremely rare coins to our Canadian clients and investors. And we found this one Tiffany coin. It was a 2-ounce silver coin, and it had a Tiffany glass inlay. I fell in love with them. I thought that they were magnificent, and knowing that Louis Comfort Tiffany, who he is and what his lamps have sold for at auction, we invested in them. We bought 5 of these little coins for $300. Do you realize today, in 2017, if you could ever find one of those 2004s, they're being offered at around $6,000. So between 2004 and 2017, a 2-ounce silver coin with a Tiffany glass inlay has gone up 2,000%. 2,000%. And that will never decline in value because you can't get them. So we invested in these type of coins because of the track record and now making these available, to our Canadian clients. So on this auction coming up, there's a magnificent Kilo Libertad, which is a Mexican coin. It's one of my favorites of all time, and I know Randy loves these. I display this particular one in my home. So again, the auction is going to be sensational. We're going to have to work out the kinks because it's a new concept for us. But again, we are excited about this. We're advertising it heavily. We're looking to bring in new clients worldwide. We're advertising, through social medias of clients that earn over $250,000 a year. And what we hope to do is build a very strong clientele outside of Canada and the United States, and I believe it's going to work out extremely well. So please sign up for that. There will be some phenomenal pieces coming up over the summer, and we'll accommodate all of our clients over the next period of time that need to sell their diamonds for whatever reason. So again, Randy, I think the results were phenomenal. I think that having money into a hard asset like a rare colored diamond or a silver or gold coin or things like that, all they're going to do is appreciate in value, and also the pride of ownership and just looking at how beautiful these pieces are, you invested wisely.
The featured diamond this week is a .91 carat radiant cut, fancy, intense yellowish green. It's a featured diamond. See it at rarecoloreddiamonds.com. If you're interested in investing in this diamond, starting a portfolio, adding a portfolio, if you'd like us to send out the auction results to you, connect with Harold Siegel at rarecoloreddiamonds.com or call 1-800-432-1022. The call is free. Anything discussed is 100% confidential. And one of the stories that got my attention this week, Pink Floyd's drummer is the Warren Buffett of classic Ferraris. Love of car racing has grown into a fortune for Pink Floyd drummer Nick Mason. Nick Mason made his first fortune playing drums for Pink Floyd. His second came from racing old cars, specifically old Ferraris that today are among the most expensive cars on the planet. And on the weekend, he took the star of his collection, a 1962 Ferrari GTO, flat out up a 1.16-mile track at the Goodwood Festival of Speed, about 60 miles south of London, in the Rolling South Downs National Park. Now, the event has grown from a small hill climb to a full-on racing weekend for superstar cars. And it's interesting, Mason says, I never wanted to be a car collector. I wanted to go motor racing. What happened was that thanks to the success of the records, I ended up being able to keep everything I've ever raced. He bought a 250 Ferrari some 4 decades ago. A similar car sold for a record $38.1 million in 2014. Everyone thought I was completely insane, including myself, I think. But now everyone talks about me being the Warren Buffett of Ferraris. So, Harold, there you go. You can see someone taking a love for Ferraris and turning it in, obviously because they had the money, that helps, but turning it into a massive profit on this love and investment. And that's one of the great things about hard assets, whether it be diamonds, whether it be collectible coins, things of that nature. It's a situation where you can enjoy them. And we've talked about this many times before. Stock certificate, bond certificate, there's no real enjoyment there. There's none at all. But with the hard asset market, whether it be paintings, handbags, watches, that's a completely different story. And Harold, we have about 30 seconds left here.
You bet, Randy. Again, very excited about what's coming up. We've got our auction coming up starting this week. Please sign up for that and pay attention. It's going to be a lot of fun. Again, I anticipate that the markets are going to start to pick up. Again, with what happened this week with North Korea and the U.S. and everything, I think we're heading into some very, very difficult times, and we need to stay on top of that.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022. Thank you, Harold Siegel, for another great show and your knowledge.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
See our featured diamond, .91 carat radiant cut, fancy, intense yellowish green at rarecoloreddiamonds.com, featured diamond of the week. That's it, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.